Hi, everyone. This is Dan Gerard, Managing Partner of G9 Financial. Also here with me today is Michael Crotty, one of our managing partners, and I have Brett Greenspan, a portfolio specialist with Morningstar, along with our colleague Brad Murphy with Morningstar, who is the local area representative who services both Mike and I. And we're here today to talk about some of the themes going on in the marketplace that are concerning to our clients that are coming to us with some questions and concerns, namely volatility. And with that, I'll turn it over to Brett to get his thoughts on what's going on in the marketplace.
Sure, Dan. Thanks for having me, Michael. Thank you. Appreciate working with you guys, the collaboration here. And yeah, certainly an interesting time to be an investor. There's really three key themes that we're seeing and hearing about from clients right now. And it's really market volatility and downside risk, it's inflation, and it's the potential for rising interest rates, right? So, if you've been following the markets, you saw that it was a bit of a rocky start to the year in January. And not a huge surprise there, given that we had a really strong year in 2021. But part of that volatility is to be expected. 2021 was a historically smooth year in terms of the direction of the market. So no surprise to see a bit more volatility. And a lot of it is in names that you're probably familiar with. You may have seen that Netflix had a pretty big drawdown after their earnings report. Same for Facebook and Meta. And I think that just really highlights the importance of having a diversified portfolio and maybe even more importantly, sticking to a plan. It's easy to let emotion get involved when you're seeing red on the screen, you see big headlines on TV about market performance. And the whole idea behind having a plan is that when times get hard, it's easy to have something to anchor to know that you put together a long-term plan that you can stick to when you maybe see uncertainty rise. So that's one thing that we're seeing is certainly that there is more market volatility right now. And I think it's more important than ever to have a diversified plan in place and to stick with it. The other key theme that we're seeing, and certainly a lot of us are feeling, is the rise of inflation. And that's continued here in 2022. The last inflation numbers we saw at the end of December were core CPI. So looking at the consumer price index, a bundle of goods, taking out food and energy costs. And those came in at about 5.5%, which is quite a bit higher than what we've historically been used to, more of a 2% target. We expect that inflation could be a bit higher for longer as supply and demand imbalances normalize over the course of the year. Again, that's barring another variant not coming up and adding additional supply chain constraints. But over the long term, we expect that number to come down over the course of the year and hopefully get closer back to that 2% target. Lastly is this concern about rising interest rates. And we've seen interest rates at lows and historical lows over the last, call it 3-5 years. We've started to see those tick up as the Fed has messaged that they intend to start raising interest rates this year, perhaps even multiple times. And that creates a challenge for investors in fixed income portfolios. If you do have an allocation in fixed income, probably best to view that as an area that's going to be more offsetting some of the risk that you're taking on the equity side, as opposed to an area where you might see significant income generation or significant capital appreciation. So those are really the key themes that we're seeing right now. And yeah, happy to, if you have any questions or Brad, anything you'd like to add there.
A couple of quick questions I have is the first thing you talked about was volatility. Number one, do you expect that to continue, which we've heard should continue throughout the year? And that shouldn't be a surprise for investors that we're in for a bit of a rocky waters this year. And then number two, it's been said over the past few years, but I think COVID and the pandemic got in the way with that, was what do we expect for returns? We've been hearing about reducing our expectation for returns in normal equity markets this year and how volatility, coupled together might impact that.
Yeah, with respect to returns, I hesitate to put a number on it, but I will say that, broadly speaking, we think that valuations, here in the U.S. are quite high, certainly relative to where they've been. But I want to counter that point by saying that we do think there are areas of opportunity within U.S. markets. You can say the market is overvalued at a high level, but that doesn't mean there's not pockets of opportunity, an opportunity to get granular with your investment approach. And for those of you that are, in diversified portfolios, you're trying to have your risk spread out into different buckets. That creates some opportunity there to be a bit more targeted. So, broadly speaking, yes, I do think that returns are, maybe lower than they've been, but there are opportunities out there. I think you also asked about volatility. And again, I'll say that that's a relative question, right? Last year, historically, volatility was very low. I think from the peak to trough, the highest to lowest drawdown we saw was a little over 5%, which ranks very low historically for the markets. So compared to last year, I expect, I think it's fair to expect that volatility may be higher, but it all is relative to your risk tolerance, your time horizon, and ultimately what you're trying to accomplish with your investments.
And Brett, one of the things that we talk about with the clients that we serve is developing that investment plan and to try to stay invested through that. So there's opportunity there's opportunity that's out there. We want to try to take advantage of that. And by going on the sideline, well, now you're losing that opportunity. Agree, disagree?
I agree. The whole reason you have a plan is not for the times when it's easy to be an investor. It's very easy to say, I've got a plan in place and the market's performing great. It's really those times where, and we're all susceptible to it. You can be a new investor. You can live and breathe this stuff. It's very challenging to leave emotion out of the investment process because it's something that's very important to you. And so I would say it's worth reminding yourself maybe a bit more frequently now than ever, given how strong market performance has been over the last few years, that you have a plan in place, not for when things are going well, but for when things maybe are going sideways or getting a bit dicier for you. That is why you anchor to a plan, have something that you can say, I put this together when things were good and I was clear-headed, and that's something I should come back to when times aren't so good.
Awesome. Well, I think, Dan, do you have any others, or Brad, anything to add on that?
Yeah, Mike, I'll just add to that, again, getting back to this concept of having a plan in place, whether you're a financial advisor or an investment manager, the benefit that an investor can derive from that is having that disciplined approach to all of this, whether it be financial planning in general, or more specifically investing. And while things like, Netflix being down 20% in a day certainly grabs headlines, and tech stocks and things like that are a popular thing to talk about because of how well they've done in the past, it's important to note that there is more to the investment world than just those types of stocks. There are a lot of areas of the market that are perhaps a little bit more boring, but also represent great long-term investment opportunities because of how undervalued they are. And so by having that plan in place and having that diversification, yes, perhaps you're experiencing gains that are lower in areas like tech stocks, or perhaps you're even experiencing losses in some of those positions, but hopefully that's offset by other investments that remain attractive. And there are areas of the market that are performing well right now, like things like energy stocks and financial stocks. And so hopefully you're able to take advantage of that through having that diversified approach and having that, most importantly, disciplined plan to stay invested, focus on things that you can control, like rebalancing and investing for the long term.
Awesome. Great. Thanks, Brad, Brett, Dan. I think that's what we're looking to get out to you, was a little bit of information on where the markets are today, some expectations going forward. We are starting to receive a few calls on the volatility, and just want to make sure we got some expert advice out there. If you are having concerns about your portfolio or your plan or your strategy, feel free to call myself, Dan, Elisa, George, any advisors on the G9 team, and we'd be happy to review your overall strategy, investment review, and how that relates to the markets today and how that relates to your overall plan. So thanks again, and hope you enjoyed this.
Great. Thank you, everybody. Thank you. And I want to say special thanks to Brett and Brad from Morningstar, one of these strategies that we have access to through our advisory platform, for participating in this. Thank you, guys.
Thank you. Appreciate the time. Have a great day.
Have a good day, everybody.